is what you see everywhere, and you see it on Twitter, you see it on the Bitcoin community versus the other community, you see it on the gold bugs versus the crypto crowd, you see it on vaxxers and the non-vaxxers, you see it in the Tesla haters and the Cathy Wood haters, the climate change deniers and the pro-climate change. Break all of that down. What is it? It's a fear of change. Technology is moving at such a pace that it's actually breaking apart society. And it's only going to get worse. And I term this the exponential age. So what we're seeing on Twitter all day, which is really polarized nowadays, is a function of this technology. And what we're seeing from the central banks and Janet Yellen is exactly the same thing. It's the fact that technology is moving so fast and nobody feels in control of it.
This is an interesting segue. I wanted to get your thoughts on some of the more sort of just general macro kind of landscape things that have been going on, conversations about inflation, the X factor of the Delta variant, all that sort of stuff. But I was reviewing some of your tweets recently, and you had posted a bunch of macro charts, and someone was like, yay, macro Raoul's back. Like, yay, it's good to see you. And you tweeted, literally all the guys I know in macro care more about crypto because it is macro now. It's the future. And it sounds kind of like that's what you're describing a little bit here. And you're actually giving body to it, to personality to it in someone like Yellen, who's not only the convergence of central banks and governments, but is also the convergence of technology being the biggest issue that central banks have to deal with, or at least in some ways.
That's right. The most macro thing that's happening is this technology. The technology of genetic sciences, cryptocurrencies, artificial intelligence, robotics, EV, battery technology, distributed computing power, Internet of Things, wearable technology. All of this is hitting adoption phase at the same time. And anybody like this, where's Macro Raoul? Macro Raoul doesn't give a shit about dollar yen because my job as a macro guy is to look for the strongest, most powerful trends and invest in them. Now, what's different about this time around is this trend is a secular trend that is exponential. So actually, none of us have been given this before. Yeah, we probably got given it with the internet in 2000, but we didn't see it. Some people saw it and did very well. Most people didn't see it. But this is the trend that it's everybody's waking up and going, okay, I get this now. And so they're like, I honestly don't care. Interest rates, yes, they're interesting, a bit of fun, you can make a trade, but when you've got something that's exponential in nature, it's a lot more attractive. And it's a lot better use of your capital than it is messing around in, will gold go up another 20% or 40% over the next year? I mean, people just don't care. And, the world's greatest macro investors, so many of them have just completely walked away and said, this is the new macro. This is where the returns are, so I go to where the returns are. That is my job. And they've gone. I mean, Alan Howard is one of the most famous macro investors of all time, and Alan's a good friend of mine. I speak to Alan weekly. We haven't spoken macro since, traditional macro, since June last year. The only conversations we have are about crypto.
That's showing up in his portfolio now, too, you can tell.
Oh, yeah. He's one of the most prolific private investors in the world now in this. So he pops up everywhere. So, I mean, that's interesting. But the macro itself, you asked about the macro itself. The world is battling over, again, a similar thing. And it's actually this technology narrative. There's two big narratives at play. One is inflation. Inflation's bad. Central banks, they've caused it. It's going to run away. Everything's going to get destroyed. And then the other hand is people like myself saying globalization, technology, debt, and demographics mean it won't stick. That's basically the argument. But the point being is inflation isn't defined properly. And this is why it ends up being such a shit fight on social media and everywhere else. It depends how you define it. So if you look at wages, there's been no inflation over the last 40 years. If you look at asset prices, they've gone up a lot. If you look at food prices, they've gone down. If you look at electronic prices, they've gone down. And everybody points to the thing that's gone up for them and say, see, inflation. The two key things have been, outside of housing, which we'll come on to, is healthcare and education. So education now is starting to deflate and it'll go negative soon. And with technology, it'll go massively negative. So why is education now deflating? Demographics. We've just put the pig in the python and it's come through the other end, which is the millennial generation. So the demand for education has gone down. It's like obvious. So why are we left with healthcare? Duh. We've got the oldest population of the largest group, which is the baby boomers, and they need all the healthcare and they haven't paid enough in premiums. So of course it's going up. So that's nothing to do with government or anything else. Sure, government regulation could lower the cost of goods in those areas, but really that's driven by demographics. But the problem is asset prices, because assets, what are assets? Assets are future consumption. So you buy an asset now, and then you sell it in due course to spend the money on something else, right? They're future consumption, and you want them to go up over time. They're going up too fast that you can buy less of a house than you could have done a year ago, or less of, less Bitcoin, or less Apple shares, whatever it may be, right? All these fixed assets, they've just exploded in price. And that is, I think, to do with the other factor, which is everyone's talking about inflation and the central bank printing, but there's no real evidence in CPI. The evidence is in assets, and that's to do with devaluing the value of fiat currency. So there's these two kind of push-pull things going on. I think inflation itself, once you put up inflation, we're seeing it now in the data all over the place. My view is that the US economy and the global economy slows down rapidly, is that you put higher prices on people, they stop spending. And that's absolutely clear in the housing market right now. It's absolutely clear in the car market. It's clear in big ticket items, is you've raised prices on people and people stop spending because they can't, because their wages didn't go up. So I'm looking for a slowdown ahead. Generally speaking, I always say the bond market is the truth, and the bond market yields have been falling and falling while everybody's been screaming inflation. I take it super seriously when the bond market does something different.
What do you think about the rising conversation around Delta variants, Lambda variants, and I'm sure there'll be another variant soon? Is that something that will be a force in this, or do you think this is a sort of inevitable hiccup, but we'll figure out? Basically, is it more political than functional in the short term?
No, I think it's functional. I think it's real. And I think it's, as you alluded to, these kind of things will have ongoing echoes for quite some time. It's another, disease we have to live with. And, the more vaccines get upgraded and the more people get comfortable with it and the more people get herd immunity to some variants, we'll get new variants. This is going to be ongoing, but less. The actual issue is, yes, at the margin, if we're seeing a slowdown potentially in the horizon, we will see a further slowdown because some parts of the economy will again lock down. Look at Australia, 5th lockdown. We're seeing, New Zealand won't reopen. The Cayman Islands, where I am, will not reopen. And then Japan, who got it right, then got it so badly wrong. So Japan got it spectacularly right, got rid of the virus very early, closed the borders, and everything was fine. But then forgot to get vaccinated, opened the border and said, let's have the Olympics with the Delta variant, and now it's exploding. So Japan is the 3rd largest economy in the world, and they're going to lock down. And what does that do for global supply chains and all the other mess? So, yeah, it's at the margin, it slows down the global economy. It will never be the same as it was in March 2020 and April 2020. But at the margin, it doesn't help the case.